Now we see opportunity for growth, but that opportunity can come at a cost. If you look at banking sector last year, I would say it is not a proper benchmark to look at because there were significant one-off gains in the industry. So you get your capital built up for future growth,
sure,
and your investors continue to be with you if you make the right ROE. Now the challenge is, where do you deploy capital where you get the maximum and the optimal return? That's a challenge we have.
In the series finale of Shapers of Tomorrow, we are joined by HNB's Chief Executive, Damith Pallewatte. Damith, welcome to Echelon. Let's start here. I mean, Sri Lanka's economy had a challenging period over the last few years. It looks like things are emerging. We are now the economy is recording good growth rates. What's the outlook like from where you are? I mean, you overlook one of the largest financial sector balance sheets in the country. For you, what's the outlook like?
First of all, thank you for having me. Pleasure to be here. So good question to start with, good start for the conversation. So we have seen from where we were maybe 2-3 years ago, we have passed COVID, we have passed crisis, but now we have seen a little bit of macroeconomic stability. So whatever the stability we got, now it's an effort how to maintain it.
Sure.
I see good prospects. Outlook as far as PC is positive. There are fundamentals that are moving on the right direction, starting from the fiscal side. If we talk about the fiscal little later, if you look at the banking sector itself, the key parameters that we would like to see stabilizing, like the interest rates, exchange rates, and of course the liquidity in the market is moving in the right direction. So we see if we continue to maintain this stability and get the fundamentals right persistently, I think we are heading for a great growth.
In your work, Damith, one way to look at your work is to look at the assets and liability that you're managing. I mean, these are the two sides of the business that you need to get right? In some periods, one is more difficult to manage than the other, more challenging than the other. How does it look like now? So when we say assets, your loan book is your main asset. Your liabilities are what you have with your depositors and obviously your shareholders. What's more challenging right now?
So I would say asset quality is the challenge because we are in a pace of growth.
Right.
So we had challenges in growing the loan books maybe 2 years ago.
Right.
So somewhat stagnant. We didn't see credit growth because there was no opportunity in the market to grow.
Sure.
So in terms of the asset quality, we were in the worst period of time maybe for the last so many years. So we were very careful in selecting what assets to choose. But now we see opportunity for growth. But that opportunity can come at a cost. So you need to make sure you have the right risk management framework, you have the right appetite, because you can't let opportunities go in a recovery period of the country like this. We were trying to come out of the crisis that we had. We are not yet fully out of the woods. So the banking sector has a role to play in that. So in that role to play, growing right asset is one of the key parameters. So we see enough credit growth.
Sure.
So I'm happy to see books have started to move.
What is your credit growth like right now?
Probably in excess of 10% credit growth we have seen for the first half. First half
has ended.
2025. So we had probably little over 10% growth, which is encouraging.
Right.
We would love to have, much more than 15-16 growth. I think it's likely.
Right.
Second half
is your budget or is your expectation to increase it this year? At the beginning of the year, did you see 10% plus growth?
Obviously, yes. We have seen the signs of economic recovery, which leads to proper credit growth. So multiple reasons. One is that when the economy was in crisis, when the dollar appreciated and the rupee depreciated, the manufacturing sector who was dependent on imported raw materials, so they wanted enhancements of credit line just to manage their capacity because the rupee has depreciated.
Yeah.
So that vacuum the banks have to fill.
Right.
Otherwise, they can't operate in the capacity they were intended for. But we would like to see is they're expanding the capacity from where they were. That is not only bringing assets to the market, but also that brings to the employment also across the economy. So that helps circulation of the money to multiple segments.
So are you suggesting the financial sector is generally in for a kind of period of growth? Because you see, inflation prices are double what they were. The currency has almost depreciated 100%. So to do the same thing, now you need double the amount of credit, which means ideally then for you double the amount of profit at the end of the day. This kind of the equation you're looking at.
So yes and a no. Yes, we are looking at double the assets, but we will not get double the profits.
Okay.
Because your cost structures have completely changed since then.
Okay.
Right? So we were 20 plus interest rates 2 years ago when the crisis hit. So now it has double digit. If you look at today, the prime lending rate fluctuates between 8 to 8.5. Right? So the deposit rates are not far away from that. So when the rates operate in a low interest regime, your margins getting squeezed day by day. So you need to manage it, because if you look at the profitability intent, the shareholders and investors need their return. So that is where the ROE of the segment or the banking sector plays a role. If you look at banking sector last year, 2024, I would say it is not a proper benchmark to look at, because there were significant one-off gains in the industry. So obviously when the ISP restructuring came through, there were banks booking one-off gains. This year, with different cost structures in a low interest rate regime, fair bit of exchange rate stability, if you maintain that growth, then I think investor confidence will be much better than last year, because for you to maintain that momentum which was created through an one-off incident, that means you had done some strategic alignment on the way that you operate. So that's a good indicator. I would say if you look at the segment, banking sector as a whole, profitability is important, because nobody will come and put their deposit for a bank which is not making profits.
Sure.
And there is no sector like banking which is regulated by multiple regulators. Sure. So to build that capital, banks need profits.
The one-off impact that you primarily may have been referring to is the impact on the balance sheet of the restructure of the international sovereign bonds. Is that impact now complete as far as HNB is concerned?
I would say yes. So that impact was taken in last year, because we built the provisions and the build buffers maybe over the last 2-year period, and which got crystallized last year. So I think now this year is pure operations, pure strategic realignment, pure effort that we put is what is reflected in numbers.
Is it also fair to suggest that, hey, about say 1 year ago or maybe 2 years ago, you were very concerned about liquidity, and now your challenge is more asset quality and cost of the business, because that impacts ROE?
Yes, liquidity was very concerned 2 years ago. We were striving for dollar, and liquidity in rupees also hard to come by. Now, if you look at in contrary, the industry has enough liquidity both in terms of rupees and dollars. So much so that the liquidity in dollars in the industry was so much, so banks have started deploying overseas.
Right.
There were a lot of offshore assets which was booked over the last 6 to 9 month period, because there were no investment opportunities to get adequate return for those dollars raised through deposits. We are paying very smart rates for depositors. So if you're paying handsomely for deposits, so we need to make a return to make sure that we cover that cost.
What percentage of your book approximately is in foreign currency?
So we have roughly, I would say,
10 or 15%?
Yeah, close about 20%.
In foreign currency.
Yeah.
And is it so that the greater challenges yield on the foreign currency versus the rupee?
It's rupee is the greater.
Okay.
Because very competitive, liquidity is in the market.
Right.
So interest rate regime has changed. Now central bank has brought in a single interest rate. So that has maintained the interest rates low. So interest arbitrage which was existing in the market has now vanished.
Right.
So you need to put your money to good use if you want to earn. So we need to make sure the deposits that we raise, which is encouraging that we see a lot of deposits are coming into the system. So we need to deploy in a place where we get the return right.
Right.
That's where the equation, that's where you need to make sure that you get the right margin, you get your profitability right. So you get your capital built up for future growth.
Sure.
And your investors continue to be with you if you make the right ROE.
Right. How you placed for the growth given the amount of capital you have? And as we know, capital is regulated on a risk-weighted basis. So you need more capital to lend to some sectors versus other sectors. And as CEO, you need to kind of be weighing the options. Do you expand your book on, for instance, leasing, or do you expand it on SME loans? How are you looking at that?
So I would say, I'm happy to say that was least of my concerns.
Right.
So
right
we
now.
have maybe about 800 basis point capital buffer than what we want to have.
Right. 800 basis points, about 8%.
8%, more than what we need to have. So that means we have enough capital to grow where we want to grow.
True.
Now the challenge is, where do you deploy capital where you get the maximum and the optimal return? That's a challenge we have. So that's why, when we embarked on this journey to deploy capital in the right places, we thought it's important to look inwards and realize how do we need to reorganize ourselves to capture this growth opportunity. So this is an opportunity we see when the country was in a state, almost everything came to standstill.
Sure.
We came out of that. Now we are looking for growth. And we are very optimistic where this growth is going to go. So that kind of a period where the banks will play a critical role in making sure that economic growth is supported. So we need to reorganize ourselves in a manner that we can support that, because we are a domestic systemically important bank. So we have a greater responsibility to make sure that as a nation, we push the country forward and we are strongholding a particular segment or economy to propel that growth.
So as CEO, you have to take a long view, right? That's primarily your job. You cannot only be concerned about the next quarter, for instance, right? And you're talking about positioning the bank to take advantage or grow in a kind of new economic structure model. I mean, considering where we've been in the last few years. What about HNB? Are you changing, needs to change to be suitable or to be ready for what's about to happen in the economy?
HNB is a 136-year-old bank. So whilst that longer you stay, bring confidence and trust in the eyes of the investor and the depositor and the client, it also comes with challenges. So there are legacy practices that is being built, so which are very hard to change. But I would say I'm lucky that we have a very dynamic workforce. So what we first did, so actually when I assumed my office last April, so we have seen these opportunities coming. And HNB is poised to capture that opportunity. So there are a few things that we need to be ready with. First, we need to look at internally of ourselves and our organization. We need to reorganize ourselves. How do we go and adapt to make sure that we support that economic recovery? To adapt, we have done few strategic movements. The first one is, our greatest asset is people. So we looked at people. How do we make sure people have that appetite to support that growth? In everything they do, they want to know what is it in for me.
Right.
That's human nature.
Sure.
Right? There is no different because it's banking. So we looked at internally and see HR, the people, the greatest assets need the transformation. So we embarked on that transformation. We got some international support. We got the best practices in, and we have implemented that. So we are now moved away from a colonial hierarchical structure in grading, managing jobs to more flexible, market-oriented structure where people see how can they build their careers with the bank. We are more transparent for them to give visibility. What is it that I need to aim for in this bank with the growth?
How do you do that? Is that a cultural change? Is that systems change? Is that management change?
It came with the management change.
Right.
We are a young, new, energetic team now in HNB. So very, very focused on what they need to achieve as a team. So HR, the people, we have different layers of people. And we also see at this moment of time a generational shift in the employees.
Sure.
Gen Z more and more coming into the workforce. So their behavior, their attitude, their appetite is different. And we can't work without them being engaged in the workforce. So having cognizant of all these things, we looked at what we need to do internally. So we graded our jobs properly so everybody knows why a job is graded either manager, senior manager, whatever the category. So they know responsibilities change. They know how do they get promotions, what responsibilities I need to shoulder if I go up on the ladder, what qualification should I aim for if I am looking for a particular job vacancy. So those things bring transparency.
Right.
It is not that easy to do that transformation because we have people who are there in the bank 20, 30, 35 years. So they used to a certain process of way of doing things. But I'm happy to say that they were very amenable to the change because they have seen the positive prospects of it. Once we do the HR asset right, now then we need to decide how are we going to capture that economic opportunity which is present in the market. So we have two options. First, we can embark on a traditional brick and mortar, go and establish branches where we want to be. Second, we can have the reach through digital means. So we opted for the second. We thought it is more effective and more timely. We embark on a journey where we bring solutions to the people problems through the digital means. So we structured ourselves in a manner that we facilitate that digital growth. So we are one of the very first banks to introduce an innovation officer to the structure. So we even though we are a regulated entity, we gave a little bit of a space for people to innovate and people to do a pilot and see how does it work.
Right.
So that gives us a lot of mileage to understand the pain points of the customer, and we should be solution oriented. We can't push products to the market. We have to resolve problems of customers.
Right. Okay. How do you do that with technology? I mean, banks have had a solid core business technology for a long time, right? But when you are trying to solve a problem for a person, it could be credit, it could be trade finance, it could be several situations. How do you use technology in that equation, and does it really work? What's your experience?
I think it's very, very interesting question. So I would say this. So why do you use an app?
Because I find some use in it. And
very convenient.
Very convenient,
right.
Yeah.
So everybody wants simplicity. Everybody wants convenience. Everybody wants a solution to their problem.
Sure.
So maybe we have seen over a period of time, there was a competition to come to the market with maybe equivalent or competitive products. But it addressed the same problem.
Right.
But we have seen when we have done our research, so there are so many problems which are not addressed.
Okay.
So we need to be solution oriented to address those problems. So digitization and bringing technology has multiple aspects. Because now the convenience that you see in your app has multi-layers. You see the front end. There is a middle layer and a back end. So unless those are also parallelly converted to support that efficiency, it doesn't work. So that is why we started with HR, the people. People need to embrace that change, that finding the solution and providing that solution should come from people. So technology facilitates it. So when we looked at technology space, so we have seen there are a lot of things which are not resolved through technology. So we started finding out what is it that technology can do to address these problems.
So you're looking at this problem from a customer's point of view.
That's what I'm trying to say.
Okay.
So we looked at from outside in perspective. If you look at today, HNB, of the fixed deposits open every month, 85% open in the app or digitally. No human intervention.
Okay, right.
94% of the transaction processed digitally. No human intervention.
Wow.
Right? We have a digital app and we have a wallet called Solo. So we put together, we call it the digital layer. So we do 300 billion rupees worth of transaction in the digital layer. 5 years ago, we were hardly doing 30 billion.
Right.
So that's the uptake. Why the usage is so much increased? Because it provides a solution. Right? So now, for example, we introduce card payments in RDA, expressway exits. So that enable them to use a non-cash solution. So likewise, our digital layer, the app and the wallet enable people to move away from cash to a cashless society and bringing convenience. So that is why we thought it is important to facilitate what people are doing without the technology through technology.
Are you surprised at the rate of adoption, or because you said you had a slow start, right?
Yes.
And Sri Lanka in general has had a slow start. But are you surprised as such?
To a certain extent, yes. But I would say the COVID has changed a lot of things. COVID has brought in a lot of digital adoption to banking industry. And we capitalized on it. Now, if you look at multiple segments of the economy where you have individuals with banking needs, where you have businesses with banking needs. Even the businesses, you have multinationals and large corporate operates at a different level and SMEs operate at a different level. If you look at these 3-4 segments, their needs are different. So individuals has the most diverse needs. That is where your technology come and helps. Now very recently, we enable them to, if you have a fixed deposit, you can borrow on the app. You don't need to go and ask for a cashback facility. Right? So first week, we had 300 million worth of loans coming in without even advertising it.
Sure.
Just launching, right? So that means there was a need.
Sure.
Somebody was having a pain going through and getting it against their own cash. And very soon there were multiple other options that we will enable, looking at what problem we resolve through that for the people.
Right.
So likewise, so I think digitalization need to bring convenience and save time to do their core business. That's what we did with corporates. We launched a transaction banking platform maybe a year and a half ago. So that brought a lot of manual work done by corporates with regard to banking transaction to one single platform. And maybe a couple of months ago, we added the trade finance platform to the transaction bank. Now they can open their letters of credits and all the trade transaction from their own office. You don't need to even walk into a bank. Very soon we will add a supply finance solution. So all your suppliers and distributors will get connected digitally. So isn't that allow them to do their core business better? Take care of what they really need to do with finances, banks, with the system.
What do you think all this will do to your own income statement? Because will it necessarily bring efficiency? Will it bring costs down?
I believe yes. That is why I started saying we need to align our people right and the processors right. So if you look at HNB, we have been traditionally structured in a way that 1/3, 2/3. Say 1/3 in maybe front-end meeting customers, providing the front-end service, and maybe 2/3 in the back-end processing functions.
Okay.
Right? So this equation makes it very costly. What does the digitization do? Half of the people in the back office work, what they are doing is now taken over by systems.
Right.
So what does that enable us? Make use of them in the front office, go and expand the market share, go and work with clients. So but that working will multiple the revenue, but you will not multiple the people.
Sure.
So that's the cost efficiency we need to target. But it's a transition, it's a transformation. We need to take it very, very methodically. Otherwise, there will be a lot of misunderstandings in the process. So that's what we are slowly doing.
You've talked about, Damith, a lot of things that are going as planned, right? As CEO, you also have to anticipate risks. I mean, I think you and the board would be spending a lot of your bandwidth trying to figure out what are those black swan events. What if that happens? Are we ready for that, right? From H&B's point of view, or from the financial sector point of view, what do you think are the kind of things that you need to plan to, or you find difficult to forecast? You know it can happen, but it's difficult to forecast.
So we just spoke of digitalization.
Right.
So we want to go digital, we want to bring convenience to you on that. With that, there are new risks emerging.
Like security.
That's right. So good old days, banking has 3 key risks.
Okay.
That is credit, market and operations. You have built formulas to project and forecast that risk. But with improvements in the technology and the digital coming into the forefront, now you have information risk. Now we have cyber security risk. Nobody is secure.
Sure.
Even Pentagon get hacked.
Sure.
So what about the banks? So we need to build dynamic resilience. It is not that you have implemented this, now we are safe. Nobody can say that. So that uncertainty always there. So that's why banks are working hard to make sure that we have a processes built. Every day, every minute, every hour, we need to be vigilant. What is it that bring in terms of threat? So it is not only protecting, we need to be offensive at times. We need to go beyond our perimeter and attack and come back because that's secures.
Sure.
So those strategies, it is very important to adapt, but it is very unpredictable. So that is the nightmare that we have at the moment. Like we have so many apps on the market, you use, customers. Think about for 1 hour, our app is down. What is the impact? But if you close a physical branch for 1 hour, we can manage it, right?
Yeah, sure.
So you can be in a different time zone when our app is closed.
Sure.
So your implications are different now. So you need to be mindful to build your defenses, risk management strategies around the new risks that have emerged. I'm not saying the old risks are no longer applicable, but it is now coming in a different way. As CEOs, we need to be ready for that.
Let's talk about segments of your customers. I mean, I think in the conversation so far, we've focused on customer needs, young customers, how you've grown, how you're catering to growing needs of businesses, right? But I believe a section of your customers, borrowers even, are those outside Colombo. They may not be very big enterprises. They may be farmers. They may be small businesses, right? What are the challenges they're facing, and how relevant is the conversation we are having to the challenges they're facing, you think?
That's a very pertinent question, Shamindra. Now, H&B started in Hatton.
Yes, Hatton National Bank as a result.
It started as Hatton Bank.
Hatton Bank, okay.
Hatton National became in 1970.
Right.
So we have our roots in agriculture.
Right.
So we have our roots in supporting the small businesses. True that we have excelled in lending to corporates, multinationals, international companies. That's a skill that we built. But our bread and butter DNA is being with the SMEs and microfinance. So we have a fairly large portfolio, if not for the largest in the banking industry. So we have roughly close to 250,000 SME and microfinance customers. That's 250,000. So those customers have their own challenges. 36 years ago in 1989, H&B started a program called Gamipubuduwa. That is a program to support youth entrepreneurs just after the unrest that we have seen in 88, 89.
Right.
When youth didn't know what to do, they don't have a means of connecting their living, we started that. So that has given birth to so many brands that you see today in the market, which a lot of people don't know. They started with the 50,000 rupee loan with HNB. Right? So we are happy we facilitated that enterprises when nobody believed, today thriving. So we continue to do that for 35 years, and that gave us a lot of knowledge and experience how to do it.
Right.
Now, if you walk out of Colombo, we have 255 branches, and I travel quite a lot throughout the country. So we see there are 3-4 key issues. Obviously, the first one is the financial literacy. They lack the same level of sophistication on understanding financial like the urban businessmen have. That is number one. Number two, they have challenges in access to finance.
Right.
Number three, they have challenges in access to advisory. So financial literacy is one thing, getting your business acumen, getting your viability assessments, all that are related to getting that advisory piece. And lastly, they need capacity building. So when you see those challenges, I think there are a lot of room for private-public partnerships to come through.
So you're suggesting you're going beyond what traditionally we'd expect of a bank here. Access to finance, yes, is something you'd want to tackle. Do you see HNB having a role in the other areas?
Absolutely, yes. So that's what we are doing. So when Gamipubudua reached 35 years, we saw Sri Lanka predominantly is agri-based economy. If you go out of Colombo, what you see predominantly is agri-based. So we thought there is a potential for a spin-off from the Gamipubudua that we can launch in those areas. That's why we launched what is called HNB Sarusara program,
right,
which is not a normal, ordinary program. It has its own objectives. We want to modernize agriculture in the country. We have seen what are the gaps in the value chain. We have seen the damages done at the middle level, connecting the farmer and the end user. And we thought we have the wherewithal to make sure that we address that problem. So we went to the market and said, we want to make farmer a different person. So the buzzword we have seen in the market is, we want to make the farmer a modern farmer. We thought that's not the right thing to do, because still the farmer will do the farming then.
Sure.
So we want to take him beyond. So we brought in the concept that we want to convert the farmer to an agripreneur. It's a new terminology we brought in because we want the farmer not to end after cultivating and getting the harvest. We want him to engage in value addition. We want him to engage in, getting into the marketplace. We want him to engage in the exports. So throughout the value chain, he has a role to play. So we brought in that capacity to the farmers, and we gave, in public, that we want to make 30,000 farmers agripreneurs in the country. And maybe so far we have done about 10,000. So the beauty is, so we are bringing technology to the farmer, and we are bringing the concepts like productivity and efficiency to the farmer. Those are never spoken of. If you look at a hectare of land, if you cultivate the same crop here in a developed country, take for example rice, the crop that they get in a developed country versus the crop that we get in Sri Lanka, maybe 25-30%. At max 40%.
Higher?
No. If developed country gets say 200 kilos, we get maybe about 75-80 kilos.
Okay.
Because we are using maybe traditional methods, maybe our seeds are different, our fertilizing methods are different. So there are various things that technology can support. So we brought in that technology. Now, there is no point we are going and telling those farmers in outstations, there is technology, you need to use it. We need to facilitate it.
Sure.
So we have gone to those villages and agri-communities, partnering with those people who supply that technology.
This is a private sector venture.
Private sector participation. So we are going with a team to farmers saying, look here, if you want to use drones, if you want to use different types of seeds, if you want to use digital apps for your farming, if you want to give new equipments, we are going with the partnerships. You can have access. If you want to finance us to access, we will do it. Then, when you get the harvest more productive and more efficiently, then you need to have a marketplace to sell. We connect the marketplace too. So what happens end of the day is we see the livelihood of the farmers are getting enhanced. So that means we are doing little more than banking
per se. Right.
So we are creating better ecosystems. We are creating better life standards for people, agri-communities. They think of educating their children. They think of sending their children abroad. They start small factories with the income that they generate. And informal borrowings go down. Harmony in the society. So there are so many aspects. So that's why, when there are so much of buzz on the sustainability.
Exactly.
Right? For HNB, sustainability is DNA. Everything what we do is sustainability.
So you found a way, or HNB has in its core strategy an element of sustainability built in. Almost.
That's what I'm trying to say. So this sustainability, even though it came very recently to the limelight, it has been in our core business value stream all throughout. We are finding it ways to bring it out to the society, not only by means of financing, by bringing certain other parameters to make sure the people feel what they get is much better than what they have.
When you also step back slightly, Damith, and look at economy-wide challenges Sri Lanka has, what role can a large financial institution such as yours play in kind of facilitating or helping the structural reforms that Sri Lanka may need, particularly in relation to attracting higher FDI, foreign direct investment?
So I think we have a bigger role to play. Unfortunately, what we see is that we have not seen that much of interest in FDIs. Perhaps maybe investors who put money into a certain project need a certain level of consistency. So they bring in an investment, they need a return.
Sure.
And there are so many unpredictable parameters and so many changes that they anticipate in between. By the time they put the investment in and by the time they take the returns, so they are reluctant to come. We have seen there were opportunities which would have come our way, might have not moved in until they see that consistency. So it is up to the policymakers, how do they make that investors confident and give an assurance that we have a consistent playbook. Now you come and invest. That is number one. Number two, investors also worried about what is the financial system that country has. I think we are one of the best secured, governed financial system. If you look at regulatory framework, I would say in South Asia, nobody is better than us. If you look at what the central bank has implemented the framework, I have been a risk manager for 15 years in my life.
Right.
Half the life, I have worked with regulators and various other people who brought in those risk management practices to secure the system. So we are one of the best. I can tell that with responsibility. So the investors have that confidence, but they need to be given confidence that there is a return possible, and throughout your investment period, we are not going to change parameters or change the milepost that you will face challenges not intended for. That is what I think this country is lacking. Also, there is something that we need to very seriously look at. I'm looking at this from a maybe larger bank point of view. So Sri Lanka needs to grow exports. There are no two words about it. And we have seen the need more than anything else during the crisis period. So to build that export ecosystem, we need to get some examples from who has done that earlier. I'm not saying we need to go and do the same thing, but at least learn from who has done that kind of a recovery and succeeded. If you look at Far East, if you look at South Korean economy, how it has grown, and those have grown around maybe few large exporters. We need to look at what does it make for us to bring that export ecosystem very resilient, and it gives so much opportunity for small exporters to, bring their game up.
So you're using this term export ecosystem. It's no longer one company being a champion, right? You're suggesting that there's more to it.
Yes, there is much more to it, because if you look at say automobile assembly, so there are hundreds of parts that needs to get built in and compiled. So there are many more industries. Like even if you look at say I take the example of agri. So we have 35% waste post harvest. So what is that we are lacking to make sure that we reduce half of it? Make sure we bring value addition like maybe juices or jam or drink or whatever it is. So there has to be an investment brought in. There has to be technology transfer that is brought in. There has to be capacity building we need to do. Where is that happening? That's what I'm saying. So once that happens, there are multiple parties that get benefited out of it. That's the ecosystem. Even the cultivator, the farmer, the supplier, all those people will benefit. That's what we need to bring. I think we see good signs. We see potentially positive signs, but we need to quicken up a little. Otherwise, we are going to lose the game.
Talking about FDI, I mean, one of the recent large FDI investments in Sri Lanka has been the port city. Right, and HNB was one of the first financial institutions to sign up with the port city. What's taking so long for things to happen there? Because you are there, right? You may not be physically there, but you are signed up. Why do you think it's taking long?
I think very timely question. So any special economic zone to succeed, the financial system is very important. Your infrastructure is very important. One without the other doesn't succeed. So we are bringing infrastructure, but we are not bringing the financial system inside. So we need to quickly make sure that we make the decisions, and whatever way it is going, allow banks to come and operate in those investment zones, especially in the port city. So look at the examples that is visible. You have DIFC, you have GIFT City in India, Gujarat. So
DIFC is Dubai.
So how do they operate? I'm not saying do the same thing. At least get a learning and implement what is more suitable for us.
Right.
So I don't think personally, no foreign bank will come and establish a branch unless local banks go and set up office. So that's how the industry moves. So we need to facilitate that. If there are challenges in bringing branches to the port city, we need to address them. There is no point keep them hanging. So investors build confidence no sooner the financial institutions come and operate. So that, I think port city is a great project. We as a financial institution advocate that at the very beginning, when at early stages, so we committed ourselves, yes, we support it and we signed up. But now many years passed. We would like to see progress. We would like to see sanity brought in terms of financial institution operations. Then from there onwards, we can look at how do we grow on that investment.
In the same vein, if you look at the broader economy, where do you think Sri Lanka needs to pay more attention to from a policy point of view to put the economy on a faster growth path, which means productivity has to improve?
I think you mentioned the word productivity. So we see good initiatives that are being implemented at the moment from a state point of view. One is the digitalization initiative. So if you don't look far, look at the neighbor. Why have they thrived on the digital ecosystem so much? So they have their single source of
identification.
So we have been struggling to get it right. So you enable finances to various groups of people no sooner you get it right. So that itself creates jobs, that itself creates opportunity for small businessmen. So you can't forget 52% of the GDP comes from small businesses in this country. There are 900,000 businesses less than 5 people.
Right. Wow.
So those are the ones we need to facilitate. That's why we see huge potential in digital. Nobody will go and address that needs by putting up branches in all around the country. So that productivity concept needs to bring in, and there has to be a drive. I'm happy to see the conversations that are taking place now in terms of digitalization journey in the state sector. We have seen some of those are implemented, making payments. Doesn't matter how small, we need to start it. We have seen traffic fines are now digitized, various other government payments are digitized. That's a good start. Now we need to keep the momentum and bring the others to the ecosystem. So the materiality of bringing digital is the traceability of your transactions. So that addresses two things. One is you create a tax efficient system. You can't evade transaction, eventually, not facing the real taxation that you should face. Number one. Number two, because you are bringing transaction to a level which is traceable, you are more exposed to get better financial support from financial institution. If I know your history of loan repayments and what kind of transactions you do, I am more willing to give a lending hand to you.
You can assess the risk much easier.
That's right. So that visibility we need to bring. So that is one of the key area that we need to think. The other area, there are 2-3 other areas I think we need to work. The main income earner for the country in terms of inbound foreign currency is tourism. So we need to have a long-term plan. So we are thinking of 5 million tourists, 3 million tourists. So we don't have capacity in the country to do it. So what is the long-term plan that somebody is envisioning that industry will thrive? So that is one. Then number two, remittances of the workers who put the effort overseas. We call it the worker remittances. So there has to be a proper mechanism. How do we bring them in the right channel? I would say at the moment, maybe at least 45 to 50% come outside the banking channel.
Wow.
How do we bring them to the banking channel so it supports the country's foreign currency reserves? So those are the aspects that digitization helps to a great extent. Then of course the export ecosystem. So those are the things that we need to be having a focus at policy level, and there has to be coordinated, curated effort with accountability to make sure that those are in the right direction.
We've had a wide-ranging chat, Damith, from the bank to the economy to small businesses and farmers. Anything you'd like to add in conclusion? Anything you want to say?
So, couple of points. So, we are in a growth trajectory.
Sure.
So, I think all of us need to be responsible. So, in a growth economy, there are opportunities arise. So, we need to have the appetite to grab the opportunities and maybe financially to support these opportunities. So in the process, we need to be mindful those opportunities are given to very focused efforts. Your use of finances in the growth economy has to be very responsible. So diversion of funds because when your lending is freely available, you tend to, use the funds in multiple other purposes than what is intended for. And number two is it's a collective effort. It's a collective effort, both private and public.
Right.
That partnership is very important. Nowhere we should differentiate. No, it's a private sector initiative, therefore let them do it. Nowhere it should say, no, it's a public sector initiative, let them do it, we will do our own thing. That to build that connectivity, I think there is important role to play by both private sector and public sector.
On that note, Damith Pallewatte, been a pleasure having this conversation.
Thank you so much. It is a pleasure. Looking forward to seeing you again.